Let's go to Sacchitanand Uttekar, though, from Tradebulls for a technical check on the markets. Hi, Sachi. Good morning. Good to see you, Ben. Markets lagging triggers, right? Waiting by for Trump earnings and wondering what's going to happen next. What's your take? You know, this 25,400 odd level has been holding out. Would you look to buy or would you wait buy?
Good morning, Nigel. Nigel, clearly the range is well defined. Unless we don't see a breakout above 25,550, we may not see the resumption of direction momentum. On a broader basis, we still continue to be on the bullish side. This is mere consolidation that we are observing. On the lower side, at least for the day, 25,350 is a kind of support wherein some buying can be initiated. Else, I think one should wait for a breakout decisively for this particular level to be taken off at around 25,500, 550. And, some aggressive long positions can be considered once this breakout is in place. When it comes to Nifty Bank, I think there could be some outperformance here. We are liking Nifty Bank and Nifty Auto. The structures are very good. There is a possibility of good relative outperformance within this particular space. So we are of the bias that eventually we may see the Nifty, breaking this particular hurdle at 25,550. And hence, even on a decline, the recommendation is to add long positions, keeping a stop loss somewhere close to around 25,320 on a closing basis. One can, accumulate Nifty near to that 25,400 mark. And on the higher side, review positions once, it is closing towards that breakout zone of 25,500, 550.
Okay. Sacchitanand, anything in terms of specifically you're seeing coming in for campus activewear, that's buzzing in trade and, good volumes is what we're seeing as well today. So anything specifically on that front as well as what are your top bets?
Well, campus, the overall structure has been fairly negative. There have been bouts of buying, which we have seen in the past. But if you look at the broader structure, the structure is still weak. We are of the opinion that there could be some more steam in this particular rally, but eventually 310, 330 looks like very significant hurdles. So from a trading perspective, one can initiate some long positions, but the stoppers has to be very specific to that 270 mark where it's 200-day exponential moving average is placed. So I would not recommend adding long positions here, but in case if someone is holding, one can put a stop loss at 270 and review positions close to 310. When you look at stocks, I think Nifty Auto and Nifty Bank, I think they are very significant right now. SBI from that space is still consolidating well. We are expecting that the movement within this 810 to 830 zone, I think it is still valid, and one should stay long with a stop loss at 810 on a closing basis. We are expecting a rebound back to around 825 levels, so a buy on SBI. And the second stock is, Maruti. Now, if you look at the last three trading sessions, despite of the market weakness, this particular stock has been forming a base near its 50-day exponential moving average support, which is placed somewhere close to around 12,460. So keeping a stop loss at 12,460 itself on closing basis, one can expect a rebound back in this particular counter. And hence, we are recommending building long position for a positional target of around 13,160.
Okay, Sacchitanand, thank you so much for joining in with us, giving us a check in terms of what to expect from the market as well as your top bets. But let's shift focus to